Hey folks, welcome back to the channel. It's Liquid here. Today I'm going to share a strategy where you can buy a stock at favorable prices if you want to dollar cost average into it long term. So for example, this is a 1 month Apple chart. This is for the month of July. And let's say you started the month over here at the beginning. You don't know what Apple is going to do. It could go up, it could go down, it could go sideways. But wouldn't it be nice if wherever the stock ends up going, if you could buy in only at these low points where the stock dips? Well, there is a way to do that. So that's what I'm going to show you today. It's basically dollar cost averaging, but you're going to get a slight advantage because you only buy the stock if it goes down. And you only need to do a couple things different from a normal stock buying order. So I'm going to be using Interactive Brokers to show the example, but you can use really any stock brokerage platform for this. I can also use TD later to give an example. So basically, I have Apple here in the stocks that I'm monitoring. You can also search for it up here. And that should open up the order entry form, or you can just right click on the stock here and then click on buy. This opens up a separate order entry form. Okay, so in this form, I want to do a buy order. And instead of 100 shares, I'm going to go with one. And for the price, instead of market or using the IB algo, I'm going to just choose limit. And right now, Apple is trading at about 171.4. So maybe for the limit here, I want to go a little bit lower than that. I want to go maybe 169. So how this is different from an ordinary order entry is instead of choosing a day type of order, I'm going to go GTD. If you're going to be going on vacation or something, a good till date will allow you to pick a specific date. Let's say I want this to expire a week from now. So I can go with the 19th, for example, and it will only execute this order before the 19th of August, which is the end of next week. So you can either choose good till date or good till cancel. I like good till cancel because that way I can control when to cancel it. Let's say by the end of next week. So instead of making like a new order, I just keep this going. So good till cancel just means whenever I decide to cancel it, up until I think it's the end of the year where IB will automatically cancel it. For you. So if I select GTC, and instead of submitting the order right away, I can click on this advanced and just go save. And this is just a notice saying that this buy order of Apple will be automatically canceled on December 31st, 2022. That's fine. And I'm going to click OK. So if I go to my order entry form here, you can see I have now a buy entry for Apple, but it is not submitted yet. So I have that submit button there if I want to submit it. And it's just for one share, and it's good until cancel at a price of 169. Okay, so then what I want to do is go back into my order entry form and basically put in another buy order. And maybe this time I'll go with 2 shares. And instead of 169, I'm going to go a little bit lower, like 166 maybe, or like 168. And again, I'm going to choose good till cancel. And then I'm going to hit save. And that's going to get added down here. So I'm going to make a couple more. Let's do another buy. 2 quantities again for 166 this time. Okay, so I've added a total of 5 different orders here for Apple. You can see I have an order to buy 1 share at 169, 2 shares if it goes down to 168. So there's 5 separate entries here. So I'm basically going to buy Apple as it goes down in price, and I'm buying more and more shares as it goes lower and lower. So here's a look at Apple's daily chart, and 164 is right around here. And 169 is here. So over the next week, Apple's going to go up and down. If it goes within this range between these two horizontal lines, then I'm going to get the shares basically bought. But if it goes up, then I won't buy those shares, which is fine because I only want to buy the shares during the dips. This is how this strategy works. So when I'm ready to submit, I can just right click on one and I can just go to submit. And this will submit just that individual order. Now what I can also do is select all of them, just hold shift and select them, and then I can right click transmit, and this way I can submit all of them at the same time. Now all of them are in, so I have these orders ready to go. Right now Apple's still at about 171.5, so if Apple doesn't come down to 169, then this one will not be filled today. And the reason I'm choosing to buy more shares as I go lower in price, like I'll buy one share at 169, but I'll buy 3 shares at 164. That's because I basically want to buy more when the stock is at a discount. If you're using a different brokerage, then that should be the same way. For example, I have TD webbroker here. I search for Apple. I click on buy. I'm going to input in the quantity I want, let's say 1. And instead of market, I'll choose limit, 169. And instead of good until the day, I will say good until cancel. So that's JTC there. And I can preview order. And if I'm happy with that, then I'm going to agree and send. I can always come back anytime during the week or the month and cancel this order if I don't think it's appropriate anymore. So for example, if Apple goes from 171 all the way up to like 194 or something like that, then I can definitely cancel my 169 and my 164 and everything in between, because it's not likely that Apple's going to drop back down to that low again. So ideally, you want to buy like at these bottoms, but it's really hard to time them exactly. And also, not a lot of people have time to actually watch the market very closely and manage their trades on like a minute or hourly basis. So if you have like a full-time job or if you're busy, what you can do is at the beginning of every week. So this is like at the beginning of this week, you can set up the trades to buy Apple at maybe at this price, and then at this price, and then lower. It's probably not going to reach that point, but at least you will be filled in with your trade over here, as well as this trade over here where you can buy 2 or 3 shares. And instead of just buying it on the day, on the beginning of the first day of the week, you're able to get Apple at a cheaper price, even though by the end of the week, Apple is here and then you still have those shares. So it's a preferential way to dollar cost average. And at the end of the week, this is the 7th of July, you would start again. Maybe on a Sunday night, you can put the order entries in. So for example, starting here, the second week, and you can put in your orders like here, 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 and here. And maybe only one of these gets filled. So this order gets filled. All these other ones basically don't get filled, but you can just cancel at the end of the week. And then in the new week, which is, let's say, the 15th, it starts here. You can put in some new order entries, and then 1 or 2 of these will get filled. Then the following week, you can see at the starting of the week, Apple is trading at about 155. So you can have your limit order in maybe at 154, and then you have another one at 153, and then maybe 152, and then maybe 150. Now the 150 is not going to get filled that week, but the other 3 will. So you're going to average down basically over the course of a week. So you can see how over time, as the stock goes up, you're going to basically buy the stock, but only when it dips. So this is not a bad way to dollar cost average in. And like I mentioned, if you think it's too much to do this on a weekly basis, then just at the beginning of every month, it could be a weekend, it could be like Saturday or Friday night. It doesn't matter if the market is closed or open, you can always put in the order anytime. And you can either choose good till cancel or good till a specific date. And you don't mind setting up these recurring entries every week or every month or however long you decide to do it. And buying stocks in small increments like this, like a little bit at a time as you go down, is better than having a lump sum at a certain price. For example, the stock is 171 today. If I were to try to buy the stock and put it in order at just like 166, but try to buy 10 shares at 166, well, the problem is I'm kind of concentrating all of my risk at that one price. So if Apple goes to 166 and then it continues dropping to like 150 over the next week, which is possible, then I basically just loaded up 10 shares of Apple at a really high price compared to what it would be at the end of the week. So by incrementally buying shares as it goes down and maybe even increasing the quantities as it goes down, you're kind of benefiting from buying more shares at lower prices, lowering your ACB over time, your cost basis. Now, that being said, there are some things to be aware of when you're using this strategy. First of all, of course, make sure you have the money to actually buy these shares. Don't just put these trades on, good till cancel, and then not actually have the money to back up the trade in case all of these get filled, which is very possible. So all you have to do is just add up the total value of the open entries that you have and make sure that you have enough money to buy all of those shares if they were to get filled. The other thing kind of goes without saying, but only do this on a stock that you believe in long term. So this is not a good strategy if you're going for a long short or trading kind of mentality, those kind of stocks, you can use a different strategy. But this is specifically for you're going to hold, you're going to buy and hold the company for like 10 years or longer, but you're just wanting to buy in at a slightly preferential price compared to what the market is currently at today. So you're basically waiting for the price to come to you, for the price to come down instead of chasing the price, because it can be pretty risky to chase returns. So you might think, Apple's at 171.5 now. You want to buy some Apple for next week, but you're not sure if you want to buy it when it's at this high. It's pretty much at like a multi-month high right now. So this is where the strategy can come into play. You can basically put in the order entries right now and maybe set it up so that you have like a 170 target and then a 169, etc. And even if by next week Apple starts trading at 172, there's a lot of fluctuation within the day. So if I change this to maybe like instead of a 1-day chart to a 30-minute chart and zoom out so we can see what it looks like during the week. So this is what the stock price was doing over the week. So even if next week on Monday, which is right here, August 15th, if it starts trading at like 172, it can still go up and down a lot. So today it's at 171.5 now, but it started the day at 169.5. So that's like a $2 difference just in today. Yesterday, big range as well. The day before that, big range because it gapped up. So even if next week Apple starts at 172, which is around here, maybe it starts there, but maybe it'll drop to like 169 before going back up to like 172 again. And that's just for the day. And this is what the week looked like over this past week here from Monday to Friday. And next week, maybe Apple goes up. Maybe it starts at 172 or 173. But even then, over the course of the week, it'll still trade within a range. And maybe that range will be maybe 167 to 176, something like that, just using the same width of this week's range, right? So even if Apple ends the week higher, which looking by the trend looks like it probably will, it's still going to trade within that range. And it would be nice if you can buy in at 169 or 168 or 170. And that way you can buy it at a cheaper price and you don't have to rush and hurry in and feel like you have to buy it at 171 today. Otherwise, you might miss it next week. So it's kind of like waiting for a Steam game to go on sale. You already have a portfolio of games that you can play, but if there's a good deal, then you might as well just pick it up. And then the final thing I just like to warn is be careful of commissions. With interactive brokers, the trading commission is like $1 per trade, so it's not bad. With some of the larger banks like TD, it's more expensive. But for a lot of other platforms, for example, Wealthsimple or Robinhood, there's free trading, so you don't have to worry about that. And then for Questrade, if you're buying ETFs, you don't have to pay for any commissions for trading as well. I think it's only when you sell that you have to pay commission. And then the final thing I just like to point out, and you probably figure this out already, it's not so much of a detriment, it's more just of an annoyance thing. If you're using this strategy to buy stocks in a non-registered or in a taxable account, then you will have to track your transactions for tax purposes, which can get kind of annoying if you have a lot of them. But if you have an automated spreadsheet process, then it should be pretty straightforward. So I think this is a great way to buy small amounts of stocks over time, especially if you're busy, if you don't have time during the week to manage your trades. You can just set it up once and then basically just leave it and forget it until you cancel it or until it expires at a certain day that you set it to. So hopefully you found that useful. Let me know if you have any questions, and I'll talk to you in the next one.